We're back with another one, and we're about to drop some serious sauce on this one. So listen up, make sure to subscribe if you guys do find this educational, and also like because it really does help the channel. And you can join the Discord; it's free. So I have all of my signals in there. We do free calls. You guys can literally get a free call with me one on one. So let's get straight into it. I mean, everyone gets it, but yeah. So coming into the day, really it's the simplest forms of execution that I always tend to take, and it's daily time frame expansionary moves executed on lower time frames. What does that mean? You want to align these high time frames with the low time frames, so ultimately you can predict the expansion, or at least see the expansionary move get built out on the lower time frame before it prints on the higher time frame. Does that make sense? Cool. So what we see is the daily time frame on GJ has been, well, to say the least, dumping. But we can clearly tell that price is retracing. We broke structure to the upside, right? And price came back into that daily order block right here. That's what happened today. So on the 4 hour, I'm coming into New York session right here. Like, this is just me waking out of bed, just looking at things and saying, "Oh, what's up?" All the other pairs, I'm trying to see if we're gonna like flip or reverse. This one is just doing a continuation because we've already done the retrace. So I'm just expecting for this to continue. Now, yes, it's a slightly more complex model, but really it's the same concept. It's just knowing what kind of candle we're going to print in advance. So 4 hour change of character, break of structure, break of structure, break of structure, break of structure, retrace, retrace, expansion. You get the feel. This is what I mean by the markets aren't complex. They're very simple if you know exactly what you're doing. So we expected the daily time frame to print a green candle and expand. We also did expect that the daily would retrace back into an order block or a premium area for the buy side model, for the buy model. So we said, okay, if price is going to go higher, it should retrace into a premium, fill more orders, and head on higher. Will be a premium area that's at OTE, if not near 61.8. That was what? The order block. So this is the daily order block right here. That's what happens. We mitigate it. Now, I know you guys are gonna like clown me for this and blah blah because I always say time frame alignment, but this is slightly advanced, so really listen up. You can't predict what's gonna happen as far as time frame alignment goes if you know what's going on the lower time frames. Meaning, if you can see invalidations of opposing structure early on, and I always say this, but I don't do it at this high of a time frame because I fear that the win rate, well, the win rate is not really going down. It's more so you need to see everything line up to the T, and you have to pick your confluences because sometimes I just merge one or two of my strategies or two of my models, you could say, so that I could have enough confluence and confidence in the trade itself. Because me just saying, oh, this 15-minute order block didn't hold, is not enough for me to say that, oh, we're going to have a 4 hour reversal. You know what I mean? So you need to see other stuff. So what did we see exactly? After this daily move, we saw that we retraced back into 50% equilibrium right here. It's precisely equilibrium for those of you who are wondering. And I'll draw it out just to show it to you. So after coming into equilibrium, that line has been misdrawn, but see, precisely into equilibrium. And I'm thinking, okay, so this is where we can actually make a candle that goes like this. Goes from here, up again, down, right? Retraces, and then comes back in to invalidate 15-minute structure and validate bullish structure so we can head on higher. Retrace. This would be the normal entry that you guys know me for, and then expand to the upside, right? This is like, I'd say that's more classic my entryways because they're less complicated and it's just more outline because I'd say, okay, daily's bullish, okay, 4 hours bullish, okay, 1 hour now is bullish. But now we said 4 hours bullish, and how can we predict that the hourly will flip in that 4 hour direction, or at the very least fill in this 4 hour order block, right? Because if you looked at the 4 hour, this is the start of the order block, or this right here is the start of the order block. Either or is fine. But to be safe, since I learned from my mistakes from the last videos, you guys can look at those where I said I didn't take profit where I should have because I was too confident in my trade direction. Where I said I need to account for all scenarios so I make money no matter what. If I'm half right or full right, but I still take money home because this is a winning game. You want to survive to trade the next day, not lose, lose, lose because you didn't get the homer. Does that make sense? So On the hourly, I said exactly what I saw. And now, how could I predict this hourly move on the 15-minute, right? Well, I actually used a few things. So I don't really tend to mention this a lot because it's not, I haven't really seen it that much on the internet, but I call it fake breaks of structure. It's essentially when you have lower time frame structures that aren't in line with higher time frames, but these differences between the two time frames aren't that high. So you see that the 15-minute at this point is bearish, right? It's actually still bullish. It hasn't flipped just yet. And the 30-minute is also still bullish. Yet the hourly showed us that it was bearish, right? Because we yet have to see that hourly expansion. So what tends to happen is we trap traders in that bearish direction by creating fake breaks of structure for people who trade extremely low time frames or who are trying to predict what the market's going to do but have the direction wrong. So what do I mean by that? Usually between 8 a.m. to 10 a.m. slash 10:30 or 3 a.m. or 2-ish, 2:30 if you really want to push it, 2:30 to like 4:30, you have something that happens, which is the fake break of structure. And by that, I don't mean what other people say by, oh, it's a liquidity sweep. It is sort of, but it happens in a very simple way. All you have to do is just see the 30-minute time frame, wait for the previous high or low of whatever directional structure you have to get invalidated right here, right? To do a sweep and close above. So all the people who have been shorting under the pretense of, oh, price will head lower are completely invalidated. And then just wait for that 30-minute candle to close. And if price closes above that price point, now you can go ahead and target that opposing liquidity upwards. It's that simple, literally. Just wait for a 30-minute sweep and close above. And all you have to do is just literally wait for one candle. I explained this right here, right? Really, was just a little too aggressive for me. That's why I said I added a couple different things in order to say, okay, I'm confident enough to take this. But this was 8:30. This was the 8:30 candle right here. It closed above that high, closed above this low here, which was a 30-minute low that would have broke structure had price closed under. So what did price do? Wait for the first down candle to form at least, and wait for a break of structure off of it, and just literally wait for the mitigation of that order block. That's literally all you have to do. That in itself right there is a pure strategy. Boom, and put your stops literally under the last low that was made. I know it's gonna be scary at first, but you'll get used to it really, and target that nearest 30-minute high right here. That simple. That's literally the model itself. That's it. And all you need to have in play is that the 4-hour is in line and the 15, the 30, and blah blah seem to be in line, but the hourly is not. That means that you're literally going to catch this thing as it's preparing to reverse. Does that make sense? You have to imagine all of these time frames aligning. The hourly is 15 minutes times 4. So that's 4 candles. So that 30 minutes times 2. So if you actually see 4 candle pattern of, oh, price went up. Let me actually draw this out for you guys. On the 30-minute, you see a up leg, a down leg, right? That's what's 2 candles. The third leg here that expanded, and then you see a 30-minute candle come in here and close above here, right? That closed above this low here. So I'll just fix that and say this is, and it closed above here, but had a wick into here, ultimately going back into the premium price array that it was targeting and also sweeping the liquidity here and closing above here. Literally find the first 1-minute candle that breaks structure off of there, target the order block that caused that break of structure, put your entry there, stops under the low, target the next high. That simple. And you can even target higher time frame highs if stuff aligns. But that's literally the juice itself. This is so much sauce right here because I'm not even gonna lie. Back when I was trying to pass fundeds, this was literally my go-to. It's like I'd pass fundeds within the span of 2 days. I just wait for 1 or 2 setups, catch a quick anywhere from 4 to 12 hour trade really. And the thing is, because the fees were so high and the win rate was high enough, I really didn't care that I had to just risk 1% or like even 0.75% in some cases. Because really, if you add a limit order on it, you get better fills. It's the best thing in play. So I saw this 30-minute sweep, like I just said, right? a 30-minute sweep of liquidity right here. I see these relative equal lows get swept and closed above. At that point, I said, interesting. Still not enough for me just yet. I'm still going to wait for one more thing, right? And that's going to be the invalidation of this 5-minute order block followed by the validation of 5-minute bullish structure. So what happened? We had this 5-minute break of structure right before market open, followed by a break of structure down. We retested this order block right here and came down. So I'm thinking to myself, the only way that I can go comfortably long here and making this a valid order block, or you could call it demand zone, was seeing one, this thing get revisited and then get invalidated, right? Two, seeing a break of structure off of it, and then that break of structure getting validated by a mitigation of the order block and a positive reaction. So what did I see? Exactly that. Break of structure off the order block, boom, retrace back in, boom, positive reaction, enter. That's it. What's happening now? We're heading to our full TP of 10R. I'm not gonna lie, this is the stop that I sent to the Discord, but really my stop was here. But that's not to the point. So that's that, and I'm sure you guys found this educational. And as usual, I emphasize a few things for all of you to know. Time frame alignment is the key to your trading. Higher time frame biases playing out on lower time frames so that you can catch the expansionary moves is pretty much the key to your trading. I cannot stress this enough. Literally, if the daily is bullish, the 4 hours bullish, the 1 hour is bullish, and you're in a 15-minute bearish scenario, wait for an order block or a premium area to get mitigated. Wait for an invalidation of that 15-minute structure by 5-minute bullish structure, and ideally some bearish invalidations, and pretty much execute. And that's literally the model itself. It's not that complicated. Higher time frames hold higher powers, but by having structure of the lower time frames on your side, you can invalidate higher time frames. I can invalidate daily structure with 4-hour structure, or daily time frames with 4-hour structure, 4-hour time frame with 1-hour structure, 15-minute time frame with 5-minute structure, so on and so forth. That's that. Make sure to subscribe. Do join the Discord, and we can even get you on a one-on-one coaching call with me for free. Literally, I'm not trying to sell you anything right now. So yeah, have a good night, and make sure to watch this and follow and subscribe.